A very good morning, good afternoon, and good evening to all. Myself, Vaibhav. In today's session of Market Movers, we will consider the possibility of taking scalping trades in USD JPY. If we consider today's financial markets, most of the moves are range bound. We don't really have big momentum in today's session. The markets are trading in a very narrow range, and in such scenarios I think going for big trades is not a worthwhile idea. So here I was considering some technicals of the USD JPY, and also we are going to take a look on Euro USD as well. And in both these currencies I feel that the possibility of USD weakening is there, and so we will see the trading opportunities there. If we consider the trading context for the day, there is not much on the data docket. We don't really have any major development which is moving the market for today's session. But those who trade in commodities, they have indeed some happenings which are of our consequence here. And one notable thing is that gold has crossed above the US dollar 1800 ounce per ounce, and that is happening after almost 9 years. It is regaining these levels after 2011. So this is the new 9-year high, and now the possibility is emerging that the gold might carry on its momentum towards its all-time highs, which is just little above 1900 USD per ounce, and those levels are not far away, but still almost 8 to 9 percentage points to go. So that's not really going to happen in one go. We will, of course, get further opportunities down the line after due consolidation. And one more thing is to look out for is the EIA's crude oil inventory data, which is scheduled to be released. And here we saw last week the record drawdown in the crude oil inventories in US. And this time around, for this week also, we are expecting the drawdown in the crude oil inventories to continue as more and more parts of economy are opening up in the United States, and as a result of that, the demand for the light crude is picking up, and that is also being reflected in the drawdown, the decrease of crude oil inventories in US reserves. So here, this time around, we are expecting a drawdown of around 3 million barrels, and this is a huge number, but compared to what we saw in the prior week, this will be on the lower side. Still, it will help the momentum which we have seen in the light crude oil prices for the last 2 months now to sustain, and we are not really expecting any downturn in the crude oil prices in the near term unless and until some dramatic developments take place. Now moving on to the technical segment, we will see the USD JPY and the Euro USD. Let's start with the USD JPY's technical outlook. So here the USD JPY has been consolidating closer to this 107.5 range, as you can observe from this daily time frame chart. The moves have been pretty narrow and pretty range bound, and the range has been of around 50 pips, including the highs and lows for last almost 4 trading session. So that has kind of made things confusing for us to bet on either side. Now, if we were to consider this crossover also, you can see that the crossovers, these EMAs, 10 and 20 EMAs have kind of converged around these 107.5 level, and that is also not helping. But one thing is that if we consider this prior formation, then we were looking at the expansion of the Fibonacci levels on the downside, and here as you can see that we had this Fibonacci expansion on the downward side, and after getting towards the 61.8% Fibonacci expansion of its prior fall, the USD JPY did rebound, and then after making high just little above 108, again it has entered into a consolidation phase. So I feel that now on the lower time frame chart, the possibilities are emerging that it might be again headed on the downside. But if we are going to look for any trading opportunity, then of course we have to be mindful of the immediate resistance zone, immediate swing highs, which are likely to act as resistance. So from that perspective, I think we can indeed look for the scalping opportunities where we can go for short sale trades in the USD JPY. Here we have these central pivot point of these month pivot point series around 108 level, and as you can see, the range is pretty wide because during the month of June we had these volatile moves, and as a result of that, the support as well as the resistance level have moved far wider in the month of July. And here we have this price action taking place just little above this central pivot point area of this month pivot point series, and it is also sort of marker that the USD JPY is likely to remain under pressure unless and until it is able to break above this central point, which is its immediate resistance zone. But it hasn't really been able to do that in last couple of trading sessions. As you can observe from these immediate swing highs, it has tried, but after getting close to that, again the selling momentum has pushed the price action lower, and today is also proving no exception. And even in today's session, again we are seeing selling pressure from the levels close to 107.7, and now the price is back to the levels close to 107.5. So here I feel that we can indeed look for short selling opportunities closer to this immediate resistance zone, and with possible targets coming just little below this immediate swing low, which is there around 107.3. So from that perspective, we can indeed look for scalping opportunities here. And I think here I couldn't include the Euro USD, sorry, the USD JPY as hourly chart, and because of that, let me see if no. So we will have to skip the hourly chart of the USD JPY, and the levels to mark out have to be considered from this 4 hourly chart as well. 4 hourly chart only. So pardon me for that. And now coming to the resistance zone, here we have this strong resistance in play around 107.8. So I feel if we are able to get any fresh short selling opportunity closer to this resistance zone with stop loss coming in just little above this central pivot point, I think a stop loss of around 108.2 should be good enough. It will be above this central pivot point as well as just closer to this immediate swing high area. So unless and until we have a fresh break above this central pivot point and a clear cut change of its immediate trend, we won't really need to be bothered about our stop loss getting hit. And on the lower side, we will have the vast area, vast price zone for us to dive lower. And if we have a break below this immediate swing low, then I think the levels below 107 can be seen in coming sessions. So if we are betting on that possibility, then I think the stop loss of around 30 to 40 pips shouldn't be a big big hurdle. And a 40 pips stop loss is also going to give us the opportunity to target around 100 pips on the lower side. So I would say that any short selling opportunity in the price band of 107.7 to 107.8 should be lapped up with stop loss coming in the vicinity of 108.20, and the immediate target works out closer to this prior swing low, which is there around 106.7. So you will get roughly the 100 pips target, and it will be better than the risk reward ratio of 1:2. Now moving on to the Euro USD's technical outlook. This is the daily time frame chart, and here Euro USD has been consolidating closer to 1.13 levels. And in yesterday's session, we had considered the possibility of Euro USD continuing to move higher towards the levels close to 1.14, and that assessment still stands well, and even in today's session we are seeing buying support coming in on the lower levels, and after this due consolidation I think we will see Euro USD getting above 1.13 and try to get back towards its immediate swing high, which is there around 1.14. So mostly we will now have to rely on the 4 hourly chart, as from the real time frame chart, the one thing we can draw on is this continuation of this bullish momentum, and no matter which way you look, most of the things are pointing to the continuation of the bullish momentum in the Euro USD. So now for optimizing the entry and exit, we have to turn our attention to the 4 hourly chart, and here we have this central pivot point around 1.125, and as you can see the consolidation has been above those levels, and for almost a day the Euro USD has been well supported above this central pivot point zone. So I feel after this due consolidation with buying momentum coming in around 1.126, we will see the Euro USD getting back towards its immediate swing high, which is there around 1.134. So here, any buying opportunity in the price band of 1.127 to 1.128 with stop loss coming in around 1.124 should be good enough, and I feel for a risk of around 30 to 40 pips. On the higher side, we can target the twice of the risk we are taking. So if your stop loss is of around 40 pips, then naturally you would like to keep a target of around 80 or 90 pips, and as I said, on the higher side we can target levels closer to this 1.14. So for a 80 pips target with supposed entry at 1.128, your target will work out closer to 1.136 or little above that. So I feel the risk reward ratio looks good enough, and then we have these multiple things which are pointing to the bullish trajectory, and even if we consider these higher highs and higher lows formation, we have these trajectory which is pointing to the north, which is pointing to the upward side momentum to continue, and we have these SMAs, the 50, 100 and 200 SMAs, which are also pointing to the continuation of the bullish tendencies of the underlying instrument. And because of that I feel that given the fact that Euro USD has been well supported on the lower side, close to this lower band of this upward moving trajectory, we can indeed think about going for a fresh opportunity here. And as I said while explaining the 4 hourly chart as well, the entry can be anywhere in the price band of 1.127 or 1.128, and with targets coming above closer to this upper band of this upward moving price channel. And as I said, the stop loss just little below this 200 SMA should be good enough, and if the price momentum breaks below this 200 SMA, then that will also signal the loss of momentum on the bullish side, and it will be better for us to get out of the trade and simply sit on the sideline. So that's what we are going to do in the Euro USD. So that's it from my side for today's session. If any of you have any query or any idea to share, you can write it in the comment section, and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. Have a fabulous day ahead. See you tomorrow. Goodbye.